Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with the recent price surge exceeding the previous resistance level. The forecast price also suggests continued upward momentum, with values consistently above the current market price. This positive outlook, coupled with the historical data, indicates a strong potential for long-term growth. Therefore, I recommend a long position in Bitcoin. The entry price should be around $100,000, allowing you to capitalize on the current market price while leaving room for potential price fluctuations. A stop loss could be set at $96,601.68, the support price, to minimize potential losses in case of a sudden market downturn. The target price should be set at $104,000, aiming to capture the projected price increase based on the forecast. This strategy allows for a balanced approach, leveraging the positive market sentiment while mitigating potential risks. Based on the provided Bitcoin Cash price data, a cautious investment strategy is recommended. The 2-week price history reveals a volatile trend with both upward and downward movements, suggesting a lack of clear directional momentum. The forecast indicates a potential decline in price over the coming week, further supporting a cautious approach. Given this outlook, a short position on Bitcoin Cash appears more suitable. An entry price around $430 would allow you to capitalize on the potential downward movement, with a stop loss set at $440 to limit potential losses if the price unexpectedly surges. The target price could be set at $410, aiming to profit from the forecasted decline while staying mindful of the potential for further price drops. This strategy prioritizes risk management and capital preservation, aiming for modest gains in a volatile market environment. Based on the provided price history and forecast for stacks, a short-term bearish strategy appears to be the most suitable. The price history shows a clear downtrend, with the recent prices hovering around $1.39. The forecast predicts further declines, reaching as low as $1.30. This indicates a high probability of stacks continuing its downward trajectory in the short term. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price of $1.39. The stop loss should be set at $1.453, the resistance price, to limit potential losses if the price unexpectedly rebounds. The target price should be set at $1.227, the support price, aiming to capitalize on the anticipated price decline. This strategy leverages the bearish sentiment indicated by both historical price data and the forecast, seeking to profit from the potential short-term drop in stacks' value. Based on the provided Ethereum data, a cautious short-term investment strategy appears most suitable. The 2-week price change reveals a somewhat volatile trend with a slight downward bias. Although the forecast predicts a decline in price over the next week, the historical data shows periods of price recovery. Considering the support price at $2,746.91 and the resistance price at $3,333.69, a short position could be considered. To implement this strategy, an entry price near the current price of $3,220 would be appropriate. A stop-loss order should be placed above the recent high of $3,450 to minimize potential losses. The target price could be set around $3,000, aligning with the lower end of the forecast and offering a reasonable profit margin. This approach allows for capitalizing on the potential for a short-term price dip while mitigating risks associated with prolonged market downturns. Given the historical price fluctuations and the forecast for Ripple, a medium-term investment strategy appears to be the most suitable approach. The recent price trend suggests a period of consolidation, followed by a potential upward movement. The forecast indicates a gradual increase in price over the next week, reaching levels above the current price. Therefore, a long position is recommended for this strategy. An entry price of $2.70 would allow you to buy in as the price approaches the support level, while a stop loss at $2.58 would protect against potential downside risks. The target price should be set at $3.15, aligning with the highest point in the forecast and offering a healthy return on investment. This strategy capitalizes on the anticipated upward momentum while mitigating potential losses through a well-defined stop loss. Given the current price trends and the provided forecast for Binance Coin, a cautious investment strategy appears most suitable. The historical price data shows a recent period of consolidation with a slight downward trend. The forecast suggests a continuation of this downward movement over the next week, potentially reaching as low as $647. The support price at $656.1 provides a potential floor for the price, while the resistance at $685.69 acts as an obstacle to further upward movement. Therefore, a short-term short position on Binance Coin is recommended. An entry price near the current market price, around $699, would allow for capitalizing on the anticipated decline. The stop loss should be set slightly above the recent high, at approximately $714, to minimize potential losses if the price unexpectedly rebounds. The target price should be set at $650, aiming to capture a significant portion of the predicted downward movement while staying above the crucial support level. This strategy aims to capitalize on the short-term bearish outlook for Binance Coin while managing risk effectively. Given the provided price information for Stellar, a medium-term investment strategy appears most suitable. The historical price data shows a volatile trend with fluctuations between $0.392 and $0.489. While the forecast predicts a slight decline in the short term, it also indicates potential for upward movement in the medium term. The support price of $0.3919 acts as a strong base, suggesting a potential buying opportunity if the price dips. The resistance price of $0.4466 presents a potential profit target. Therefore, an investment strategy for Stellar should involve a long position with an entry price around $0.420, slightly below the current price and above the support level. The stop loss should be set at $0.392 to limit potential losses. The target price could be set at $0.446, aiming to capitalize on the potential upward movement towards the resistance level. This medium-term approach allows for potential profit while managing risk. Based on the provided information for Toncoin, a short-term investment strategy appears most suitable. The historical price data reveals a recent downtrend, with prices fluctuating around the $5 mark. The forecast further indicates continued downward pressure, with prices potentially dropping to as low as $4.62 in the coming week. This bearish outlook suggests that a short position would be more advantageous. An entry price of $5.20 would allow for a quick entry into the market while aligning with the current price range and a projected downward movement. A stop loss at $5.35 would protect against potential upward reversals, while a target price of $4.80 would capitalize on the anticipated decline. This strategy aims to profit from the short-term bearish momentum in Toncoin by entering a short position at a favorable entry price and securing profits before the price reaches its forecasted low. Given the price trends and forecast for Cardano, a medium-term investment strategy focusing on a long position appears promising. The historical prices show a consistent upward trajectory, with recent fluctuations suggesting consolidation before a potential breakout. The forecast indicates a slight upward movement in the coming weeks, aligning with the historical trend. The support price of $0.8498 provides a solid foundation for potential price growth, while the resistance level of $1.1359 presents a target for the medium-term investment. Therefore, an ideal entry price for a long position would be around $0.978, slightly below the current price, allowing for a margin of safety. A stop loss at $0.945, close to the recent lows and a key support level, would protect against significant downside risk. The target price could be set at $1.10, aiming for a reasonable profit while leaving room for further upside potential. This strategy capitalizes on the bullish outlook for Cardano while managing risk through a well-defined stop loss and a realistic target price. Based on the provided Litecoin data, a medium-term investment strategy appears most suitable. The historical price shows volatility, with recent fluctuations between $98 and $136. However, the forecast indicates a slight upward trend, suggesting potential for growth. The current price is relatively close to the support price of $102.51, indicating a potential buying opportunity. Therefore, a long position is recommended for a medium-term investment. The entry price should be around $103, allowing for a small margin above the support price. The stop loss should be set at $99 to minimize potential losses if the price drops. The target price could be $120, aiming to capitalize on the projected upward trend. This strategy balances risk and reward, allowing for potential profit while mitigating potential losses. Based on the provided price information for Doge-Coin, a cautious investment strategy would focus on a short-term approach. The 2-week price change shows a lack of clear direction, with fluctuations around the $4.70 level. While the forecast indicates a slight downward trend, the support price at $4.0892 suggests a potential floor for the price. Given this uncertainty, entering a long position carries significant risk. Therefore, a short-term short position appears to be a more suitable strategy. An entry price around $4.85, slightly above the current price, allows for a small margin of safety. The stop loss should be set at $4.97, protecting against an unexpected price surge. The target price could be set at $4.60, aligning with the lower end of the forecast and providing a potential profit margin. This strategy aims to capitalize on any short-term downward momentum while mitigating risk through a well-defined stop loss. Given the provided Aptos price history and forecast, a cautious investment strategy focused on the short term appears most suitable. The historical prices demonstrate a recent decline, and the forecast predicts further downward movement over the next week. The support price at $7.95 indicates a potential floor for the price, while the resistance at $8.56 suggests an upward barrier. Therefore, a short position is recommended to capitalize on the anticipated price decline. An entry price of $8.40, slightly above the current price and below the resistance level, would be appropriate. A stop-loss order should be placed at $8.60 to limit potential losses if the price unexpectedly rises. The target price could be set at $7.90, aligning with the support price, allowing for a reasonable profit margin before reaching the potential floor. This strategy aims to take advantage of the short-term bearish trend in Aptos while managing risk effectively. Based on the provided price history and forecast for SE, a short-term bearish investment strategy appears to be the most suitable. The historical price data shows a downward trend over the past 2 weeks, and the forecast predicts further declines. This suggests a potential for profit from a short position. Considering the current price and the forecast, an entry price of $0.385 would be advisable. A stop-loss order should be placed at $0.3989, the resistance price, to limit potential losses if the price unexpectedly rises. The target price should be set at $0.323, aligning with the lowest predicted price in the forecast. This strategy aims to capitalize on the anticipated price decline while managing risk effectively. Remember that this is just a suggestion based on the available information, and conducting thorough research and considering your own risk tolerance is crucial before making any investment decisions. Given the price trends and forecast for Ethereum Classic, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering around the support level of $24.58. The forecast indicates further declines, suggesting Ethereum Classic could drop to $24 in the coming week. While the resistance level is at $28.30, indicating potential for upward movement, the short-term forecast suggests a higher probability of a downward trend. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive entry price would be $25, aligning with the current price and the forecast. The stop loss should be set at $25.50 to protect against any unexpected price recovery. The target price should be $24, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $24.58. Given the provided price information for Polygon, a cautious investment strategy focusing on the short term appears most suitable. The historical price data reveals a downward trend, and the forecast indicates further declines in the coming week. Although the support price of $0.4276 provides a potential floor, the resistance level at $0.4535 suggests limited upside potential. Therefore, a short position would be the most appropriate approach to capitalize on the anticipated price decrease. For this strategy, consider entering a short position at the current price of $0.482. Set a stop loss at $0.492 to minimize potential losses if the price unexpectedly rises. The target price should be set at $0.427, aiming to profit from the predicted decline towards the support level. This strategy prioritizes risk management while seeking to capitalize on the short-term bearish outlook for Polygon. Given the provided price information for AEVO, the historical data shows a downward trend over the past 2 weeks. The forecast also suggests further price declines in the coming week. Considering this bearish outlook, a short position appears to be the most suitable strategy. To implement this strategy, we would enter a short position at the current price of 33 cents. The stop loss should be set at $0.364, the highest price point in the recent history, to limit potential losses in case the price unexpectedly rises. The target price would be $0.251, the lowest price predicted in the forecast, allowing for a potential profit if the market follows the bearish trend. This short-term strategy aims to capitalize on the anticipated price decline of AEVO. Given the provided price history and forecast for optimism, a cautious investment strategy with a short-term perspective is recommended. The recent price history shows a downward trend, with the forecast predicting further declines. The support price at $1.577 suggests a potential floor for the price, while the resistance at $1.731 indicates a significant hurdle for upward movement. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $1.70 could be considered, aligning with the current price and recent highs. The stop loss should be set at $1.75 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $1.60, aiming to capture a portion of the predicted downward movement. This strategy focuses on a short-term opportunity to profit from the bearish outlook for optimism, while managing risk through a well-defined stop loss. Based on the provided data for STRK, a cautious investment strategy leaning towards the short term would be most suitable. The historical price data shows a generally downward trend over the past 2 weeks, with the forecast projecting further declines. While the support price at $0.3346 provides a potential floor, the resistance at $0.3942 suggests limited upside potential. Considering this bearish outlook, a short position is recommended. An ideal entry price would be around $0.388, aligning with the first forecast price. The stop loss should be placed at $0.418, slightly above the recent historical high, to minimize risk of a sudden price reversal. The target price could be set at $0.352, which is a conservative estimate based on the forecast, allowing for potential profit before the price potentially reaches the support level. This strategy allows for capitalizing on the anticipated decline while managing risk through a well-defined stop-loss order. Solana shows a consistent upward trend over the past 2 weeks, with a price surge towards the end. The forecast price indicates continued growth in the coming week, reaching up to $262. This bullish momentum, coupled with the support level at $237.99 and the resistance at $261.58, suggests a favorable environment for a long position. Therefore, an aggressive investment strategy for Solana would involve taking a long position with an entry price at $250. This price point allows for potential upside while staying below the current resistance level. A stop-loss order should be placed at $240 to mitigate risk in case of a sudden price reversal. The target price should be set at $265, aiming to capture a significant portion of the anticipated price increase. This strategy capitalizes on the bullish outlook for Solana, allowing for potential high returns in the short to medium term. Based on the provided data for Jupiter, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with both upward and downward movements. While the forecast suggests a potential upward trajectory in the coming weeks, reaching prices around $0.971, the recent price dip and proximity to the support price of $0.772 indicate a possibility of further consolidation or even a slight retracement before a sustained upward move. Therefore, a long position is recommended for a medium-term investment horizon. An entry price around $0.830, near the current price and above the recent support level, would be appropriate. A stop-loss order could be placed at $0.780 to limit potential losses in case the price retraces towards the support level. The target price could be set at $0.950, aiming to capture a portion of the projected upward movement. This strategy allows for capitalizing on the potential upside while mitigating risk through a well-defined stop-loss. Given the price trends and forecast for render, a cautious investment strategy focusing on the short term seems appropriate. While the historical prices show some volatility, the forecast suggests a continued downward trend over the next week. This downward momentum, coupled with the price currently hovering near the resistance level, indicates a potential for further price decline. A short position could be considered to capitalize on this anticipated drop. An aggressive short-term investment strategy could involve entering a short position at the current market price, around $7.46. The stop-loss could be set at $7.70, slightly above the current price, to limit potential losses if the price unexpectedly rises. The target price could be set at $6.60, aligning with the forecast's lowest projected price, allowing for potential profit before the market potentially finds support. This strategy acknowledges the inherent risks associated with short selling and emphasizes the importance of risk management through a well-defined stop-loss order. Given the price trends and forecast for Solana name service, a cautious investment strategy would focus on a short-term approach. The historical prices show a general downward trend, with the current price hovering near the support level of $0.2202. The forecast suggests a continued decline in the coming week, with prices potentially dropping towards $0.216. Considering this bearish outlook, a short position is advisable to capitalize on the anticipated decline. An entry price of $0.228, slightly above the current price, allows for a small buffer while still capturing potential downward movement. The stop-loss should be set at $0.234, just above the recent resistance level, to protect against unexpected upward price swings. The target price could be set at $0.215, aligning with the forecasted lower bound, allowing for potential profits before reaching the support level. Given the provided price history and forecast for Doge-Coin, a medium-term investment strategy appears most suitable. The recent price history shows a volatile but generally upward trend, with a slight dip in the past week. The forecast indicates a slight upward movement over the next week, suggesting a potential for continued growth. Therefore, a long position is recommended. A conservative entry price could be around $0.352, slightly below the current price and above the recent support level. The stop-loss should be set at $0.34212, the identified support price, to minimize potential losses. The target price could be set at $0.39414, the identified resistance price, aiming to capture a significant portion of the potential upward movement. This strategy allows for potential profits while managing risk through a well-defined stop-loss mechanism. Based on the provided data for PEPE, a short-term bearish investment strategy appears to be the most suitable approach. The historical price data shows a downward trend over the past 2 weeks, and the forecast price indicates further declines in the coming week. The price is currently hovering near its resistance level, suggesting a potential for a pullback. Considering this bearish outlook, a short position on PEPE would be advisable. To implement this strategy, an entry price of $0.0000185 could be considered, aligning with the current price and the anticipated downward movement. The stop loss should be set at $0.0000191 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.0000157, aiming to capture a significant portion of the projected decline. This strategy aims to capitalize on the short-term bearish momentum of PEPE, seeking to profit from the anticipated price drop. Given the price trends and forecast for SHIB, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight upward trend, with the current price hovering near the support level. However, the forecast suggests a potential decline in the coming week. This indicates a slightly bearish outlook in the short term. Therefore, a short position seems more suitable to capitalize on the anticipated price decrease. An entry price of $0.0000220, slightly above the current price, would be ideal to allow for some price fluctuation before entering the trade. The stop loss should be set at $0.0000228 to protect against any unexpected price surge. The target price should be set at $0.0000205, aligning with the forecasted price decline, allowing you to take profits before the market potentially hits the support level. Based on the provided price history and forecast for Dog with Hat, a short-term bearish strategy appears to be the most suitable. The price history shows a downward trend, with the recent price hovering around $1.56. The forecast predicts a further decline in price, reaching as low as $1.26 in the coming weeks. This downward momentum, coupled with the support price at $1.394 and the resistance price at $1.853, suggests a potential for a short position to yield profits. Therefore, an aggressive investment strategy would involve entering a short position at $1.56, the current market price. A stop-loss order should be placed at $1.65 to mitigate potential losses if the price unexpectedly rises. The target price for this short position would be $1.35, aiming to capture a significant portion of the predicted price decline. This strategy capitalizes on the short-term bearish outlook for Dog with Hat and aims to profit from the anticipated price drop. Based on the provided price information for Doge-Coin, a cautious investment strategy focusing on the short term appears to be most suitable. The historical price data reveals a downward trend, with the recent price hovering close to the support level of $0.004845. The forecast also indicates a continued decline in price over the next week, suggesting potential further losses. Given this bearish outlook, a short position would be advisable to capitalize on the anticipated price drop. An entry price of $0.00591, slightly above the current price, would allow for a quick entry into the short position. The stop loss should be set at $0.00644, slightly above the recent high, to protect against any unexpected upward price movement. The target price could be set at $0.00521, aligning with the forecast's lowest predicted price, allowing for a reasonable profit margin while minimizing risk. This strategy prioritizes capital preservation over aggressive returns, taking advantage of the short-term price decline while mitigating potential losses. Given the price trends and forecast for NEAR protocol, a cautious investment strategy would focus on a short-term approach to navigate the potential volatility. The historical prices show a recent dip followed by a slight recovery, with the current price hovering near the support level of $4.754. The forecast suggests a continued downward trend, with prices potentially dropping to around $4.78 in the coming week. In this scenario, a short position is advisable to capitalize on the anticipated decline in prices. A conservative entry price would be $5.01, aligning with the first forecast price. The stop loss should be set at $5.149, the resistance level, to protect against any unexpected price surge. The target price should be $4.754, the support level, allowing you to take profits before the market potentially hits major support. This strategy aims to minimize risk while seeking to profit from the anticipated short-term price decline. Given the price trends and forecast for Internet Computer, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $9.422. The forecast indicates further declines in the coming week, suggesting a potential for continued downward pressure. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $9.80, slightly above the current price, allows you to enter the position while minimizing risk. The stop loss should be set at $10 to protect against any unexpected price recovery. The target price should be set at $9.30, aligning with the forecast and the support level, allowing you to take profits before the market hits major support. Based on the provided data for Injective, a short-term bearish strategy appears to be the most suitable. The 2-week price history shows a downward trend, and the forecast indicates further declines in the coming week. While the support price is at $19.69, the current price is hovering above this level, suggesting a potential for a short squeeze. Therefore, a short position is recommended with an entry price at $22, aligning with the current market price. A stop-loss order should be placed at $23.50 to limit potential losses if the price unexpectedly rebounds. The target price is set at $19.80, aiming to capitalize on the anticipated price decline towards the support level. This strategy capitalizes on the short-term bearish momentum while managing risk with a well-defined stop-loss order. Based on the provided price history and forecast for BTC, a cautious investment strategy is recommended. The historical price data reveals a volatile trend with fluctuations both upward and downward. The forecast suggests a continued downward trend in the coming weeks, with prices potentially falling below the current level. The support price of $417.80 acts as a potential floor for the price, while the resistance at $441.80 presents an obstacle to any significant upward movement. Given this outlook, a short position on BTC is advisable. An entry price around $430, slightly above the current price, allows for a margin of safety while capitalizing on the potential for further decline. The stop loss should be set at $440 to limit potential losses if the price unexpectedly rises. The target price can be set at $410, aiming to capture a portion of the anticipated downward movement. This strategy emphasizes risk management and capital preservation, aligning with a medium-term investment horizon. Based on the provided THETA network price information, a short-term bearish investment strategy is recommended. The historical price data shows a downward trend over the past 2 weeks, and the forecast predicts further declines. The support price is at $1.707, while the resistance is at $2.035. This indicates that the price is likely to continue its downward movement in the short term. Therefore, a short position should be taken with an entry price at $2.03, slightly above the current price. The stop loss should be set at $2.1, protecting against any unexpected upward price movements. The target price should be $1.85, aiming to capture a potential decline towards the support level. This strategy capitalizes on the anticipated downward trend and aims to generate profits within a short time frame. Based on the provided data for WorldCoin, a cautious short-term investment strategy appears most suitable. The 2-week price history reveals a downward trend, and the forecast predicts further declines over the coming week. Although the support price is relatively high at $1.659, the historical price data suggests a strong possibility of the price falling below this level. Therefore, a short position is recommended. An entry price of $2.05, slightly above the current price, allows for a buffer against potential short-term price fluctuations. The stop loss should be set at $2.19, just above the recent price high, to minimize potential losses. The target price is set at $1.87, aligning with the forecasted price drop and allowing for a reasonable profit margin. This strategy capitalizes on the bearish outlook while mitigating risk through a well-defined stop-loss order. Based on the provided price history and forecast for hooked protocol, a short-term bearish investment strategy appears most suitable. The historical price data shows a downward trend over the past 2 weeks, with the forecast predicting further declines in the coming week. This indicates a lack of bullish momentum and suggests that the price of hooked protocol is likely to continue falling in the short term. Therefore, an aggressive short-term investment strategy would involve taking a short position on hooked protocol. A suitable entry price would be around 35 cents, aligning with the recent price action and the forecast. The stop loss should be set at 37 cents, slightly above the current price, to protect against any unexpected upward price movements. The target price would be 30 cents, based on the forecast's prediction of a decline towards the lower end of the range. This strategy aims to capitalize on the anticipated downward price movement of hooked protocol in the short term. Artificial Superintelligence Alliance's recent price history reveals a downward trend, with the forecast indicating further declines. The historical prices show a consistent downward trajectory, with the current price close to its forecast and near the support level of $0.816. The resistance is at $1.205, indicating a potential for further downside movement. Given these factors, a short-term investment strategy focusing on a short position appears to be the most suitable approach. To execute this strategy, we can enter a short position at $1.31, a price point slightly above the current price and near the recent resistance level. The stop loss should be set at $1.41, protecting against any unexpected price surges. The target price should be set at $1.16, aligning with the forecasted lowest price and aiming to capitalize on the anticipated decline. This strategy capitalizes on the bearish sentiment and aims to profit from the potential price drop towards the support level. Given the price trends and forecast for Polkadot, a cautious investment strategy would focus on a short-term approach. The historical prices show a mixed trend with recent fluctuations. The forecast indicates a downward trend in the coming week, suggesting potential for short-term profit. The support price at $4.323 acts as a potential floor, while the resistance at $7.03 signifies an upper limit for potential price movement. Therefore, a short position is recommended to capitalize on the anticipated decline in prices. An entry price of $6.70, slightly above the current price, would allow for some room for price fluctuation before entering the short position. The stop loss should be set at $6.90 to protect against any unexpected price surges. The target price should be set at $6, aligning with the forecast and offering a potential profit margin. This strategy aims to minimize risk while taking advantage of the predicted short-term downward trend. Filecoin's recent price history shows volatility, with fluctuations both upward and downward. However, the forecast suggests a continued downward trend over the next week, with prices potentially dropping below the current level. Considering this bearish outlook, a short position on Filecoin appears to be the most suitable strategy. An aggressive short-term investment strategy could involve entering a short position at the current price of around $5.44. The stop loss should be set at $5.85, above the recent resistance level, to protect against any unexpected upward price movements. The target price could be set at $4.93, aligning with the forecast and allowing for potential profit before the price potentially reaches the support level of $4.531. Given the price trends and forecast for Conflux, a conservative investment strategy would focus on a short-term approach to navigate the potential volatility. The historical prices show a mixed trend, with recent fluctuations suggesting uncertainty. The forecast indicates a downward trajectory, with prices potentially dropping to $0.146. However, the support price at $0.1423 provides a potential floor, limiting further downside. Therefore, a short-term short position is advisable. An entry price of $0.150 would allow you to capitalize on the potential decline, with a stop loss set at $0.152 to protect against unexpected price surges. The target price should be $0.143, aiming to capture a portion of the anticipated downward movement while respecting the support level. This strategy prioritizes risk management and capital preservation, seeking modest gains within a short time frame. Given the price trends and forecast for Ethereum name service, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $30.89. The forecast suggests a continuation of this downward trend, with prices potentially dropping further in the coming week. This indicates a bearish outlook in the short term, making a short position the most suitable strategy. To execute this strategy, we recommend entering a short position at the current price of $33. The stop loss should be set at $34 to protect against any unexpected price recovery. The target price should be set at $30, slightly above the support level, allowing you to take profits before the market hits major support. This approach aims to capitalize on the anticipated decline in prices while managing risk effectively. Given the price trends and forecast for Avalanche, a cautious investment strategy would focus on a short-term approach to navigate the potential volatility. The historical prices show a fluctuating trend with a recent dip, while the forecast indicates a continued downward movement. The support price of $28.83 represents a potential floor for the price, while the resistance at $37.33 suggests limited upside potential in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $36, aligning with the recent price action and the forecast, would be suitable. The stop loss should be set at $37 to protect against any unexpected price surges. The target price could be set at $34, aiming to capture a portion of the potential downside movement before reaching the support level. This strategy prioritizes risk management and capitalizes on the short-term bearish outlook for Avalanche. Based on the provided Vecane price data, a cautious medium-term investment strategy appears most suitable. The recent 2-week price change shows a slight upward trend, but the 1-week forecast suggests a potential pullback. The support price at $0.04302 indicates a potential floor for the price, while the resistance at $0.05304 suggests an upper limit for the near future. Considering this, a long position is recommended with an entry price around $0.0450. This price point allows for potential upside as Vecane approaches the resistance level while mitigating risk by entering above the recent low. A stop loss should be placed at $0.0435 to protect against a potential drop below the support level. The target price could be set at $0.0480, aiming for a moderate gain before the potential pullback predicted by the forecast. This strategy allows for potential profit while managing risk in a volatile market environment. Given the price trends and forecast for PENDLE, a cautious investment strategy would focus on a short-term approach to navigate the potential volatility. The historical prices show a mixed trend with recent fluctuations, and the forecast suggests a slight downward movement in the coming week. The support price at $3.227 acts as a potential floor for the price, while the resistance at $4.327 indicates the upper limit for potential gains. Considering these factors, a short position on PENDLE appears to be a more prudent strategy. An entry price of $3.96, aligned with the recent historical price, would allow you to capitalize on the potential downward movement. The stop loss should be set at $4.01, slightly above the entry price, to minimize potential losses if the price unexpectedly rises. The target price could be set at $3.33, aligning with the lowest projected price in the forecast, allowing you to secure profits before the potential price reaches the support level. This strategy prioritizes risk management while aiming to capitalize on the anticipated short-term price decline. Based on the provided The Sandbox price information, a cautious investment strategy focusing on the short term appears most suitable. While the historical price data shows some fluctuations, the 2-week price change indicates a downward trend, and the forecast predicts further declines in the coming week. The support price at $0.3478 suggests a potential floor for the price, but the resistance at $0.5775 indicates a significant barrier to upward movement. Given these factors, a short position on the sandbox is recommended. An entry price around $0.600 could be considered, aligning with the current price and allowing for potential profit as the price moves towards the predicted support level. A stop loss should be set slightly above the entry price, around $0.620, to minimize potential losses if the price unexpectedly surges. The target price could be set at $0.550, aiming to capture a portion of the anticipated decline while remaining mindful of potential market volatility. Based on the provided data for Decentraland, the historical price shows a fluctuating trend with no clear upward or downward momentum. The forecast price suggests a downward trend over the next week, which aligns with the recent price decline. Considering this bearish outlook, a short-term strategy focusing on a short position seems more suitable. An entry price of $0.498, the current price, would allow for immediate participation in the potential downward movement. The stop loss should be set at $0.519, slightly above the recent high, to protect against any unexpected price reversals. The target price could be set at $0.456, the lowest price point in the historical data, aiming to capitalize on the full extent of the predicted decline. This strategy capitalizes on the short-term bearish sentiment indicated by the forecast price while managing risk through a well-defined stop loss. Based on the provided ENG coin price data and forecast, a short-term bearish investment strategy is recommended. The historical price shows a downward trend over the past 2 weeks, and the forecast predicts further declines. The current price is hovering near the resistance level of $0.209, suggesting a potential for a pullback. Therefore, an aggressive short-term strategy would involve taking a short position at the current market price. A stop-loss order should be placed at $0.217, slightly above the current price, to limit potential losses. The target price could be set at $0.169, aligning with the lowest point in the forecast. This strategy capitalizes on the anticipated downward price movement while managing risk through a well-defined stop-loss order. Given the price history and forecast for Uniswap, a short-term investment strategy appears to be the most suitable approach. The historical data shows a slight downward trend, with the forecast indicating further declines in the coming week. The support price of $12.55 acts as a potential floor for the price, while the resistance price of $13.675 presents a significant barrier to upward movement. Therefore, capitalizing on this potential downward trend by taking a short position seems prudent. To implement this strategy, we would enter a short position at the current price of $13. The stop loss would be set at $13.675, above the current price and resistance level, to minimize potential losses if the price unexpectedly rises. The target price would be set at $12.55, aligning with the support price and offering a reasonable profit potential if the forecast holds true. This short-term approach allows us to capitalize on the anticipated price decline while managing risk effectively. Given the price trends and forecast for Chainlink, a short-term investment strategy focusing on a long position appears promising. The historical prices show a recent upward trend, with the current price hovering near the support level of $21.97. The forecast indicates a gradual increase in price over the next week, suggesting further potential for upside. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current market price, around $23. The stop loss should be set slightly below the support level at $21.95 to minimize potential losses. The target price could be set at $25.15, aiming to capture a significant portion of the anticipated price increase before reaching the resistance level. This strategy capitalizes on the bullish momentum indicated by both the historical price data and the forecast, while also incorporating risk management measures to protect against potential downside movements. Given the price trends and forecast for Aave, a cautious investment strategy would focus on a medium-term approach. The historical prices show some fluctuations but lack a clear, consistent upward or downward trend. The forecast suggests a slight downward movement in the coming week, aligning with the recent price dip. However, the support price at $294.63 indicates potential for a rebound. Considering this, a medium-term long position is advisable. An entry price of $298 could be considered, as it offers a slight discount to the current price and sits above the support level. The stop loss should be set at $294 to protect against further downward movement. The target price could be set at $330, aiming to capitalize on a potential price surge towards the resistance level. This strategy allows for potential profit while mitigating risk by staying above the support level and setting a clear stop loss. Based on the provided price data and forecast for EOS, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a fluctuating trend, with recent price movements suggesting a potential sideways consolidation. The forecast indicates a slight downward trend over the next week, hovering around the support price level. Considering these factors, a short position could be considered, aiming to capitalize on the potential downward movement. An entry price around $0.800 could be considered, aligning with the forecast and the current price. The stop loss should be placed slightly above the recent high of $0.936 to minimize risk from unexpected upward movements. The target price could be set around $0.770, factoring in the support price and the projected downward movement. This strategy aims to capture potential short-term profits while acknowledging the inherent volatility of the cryptocurrency market. Given the historical price data and the provided forecast for Tron, a cautious investment strategy is recommended. The historical prices show a downward trend over the past 2 weeks, and the forecast suggests further declines in the coming week. The support price of $0.2209 indicates a potential floor for the price, while the resistance price of $0.2444 suggests limited upside potential. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $0.238, slightly above the current price and near the recent high, allows you to enter the trade while minimizing risk. The stop loss should be set at $0.2444, above the resistance price, to protect against any unexpected upward movement. The target price should be set at $0.2209, the support price, aiming to capture the majority of the potential downside. This strategy focuses on a short-term investment horizon, taking advantage of the bearish outlook for Tron in the near future. Based on the provided information for Suncoin, a cautious investment strategy is recommended. The 2-week price change shows a general downward trend, and the forecast predicts further declines in the coming week. The price is currently hovering near the support level of $0.01903, indicating a potential for further downside. Considering this bearish outlook, a short position would be the most suitable strategy. To execute this strategy, an entry price of $0.0214, aligning with the forecast, would be appropriate. A stop loss should be placed at $0.0228 to protect against unexpected upward movements. The target price could be set at $0.0190, aiming to capture potential gains as the price approaches the support level. This strategy prioritizes risk management and capital preservation, capitalizing on the anticipated price decline while minimizing potential losses.